This is ShadowQuant, Market Brief, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Thursday, July 2, 2026, and this is the Tokyo session. Now, let's get into it. The US dollar weakened sharply after the latest jobs report missed consensus estimates, sending the dollar index lower and triggering a rotation away from growth stocks. With the VIX remaining subdued despite crypto markets flashing extreme fear, the market is pricing in a softer labor narrative, but volatility could spike as Asian markets open.
Here is the close. The S&P 500 tracked by SPY settled at $74.57, down 14 basis points. The Nasdaq 100 tracked by QQQ was the day's laggard, closing at $72.17, down 1.52%. The Dow Jones Industrial Average tracked by Diamonds finished flat at $522.40. The Russell 2000, tracked by IWM, dipped 0.3% to $299.32.
Grid reports the market is caught between a weak dollar and a tech sell-off. Let's look at the corporate action driving that move.
Corporate headlines were dominated by earnings reactions and regulatory filings. Core Scientific reported fourth-quarter results that disappointed the street, leading to a sharp decline in after-hours trading. Meanwhile, UBS slashed its oil price forecast for the third quarter by $25, citing a shift in supply dynamics.
Corporate flows are mixed, but the macro data is telling a different story. Pulse, what did the jobs report say? The headline from the labor market is clear. The non-farm payrolls report for June missed consensus estimates. This miss is the primary driver behind today's dollar weakness. The latest data shows non-farm payrolls at 158,984,000, with a month-over-month change of plus 57,000. The unemployment rate held at 4.20%. With yields flat and the dollar sliding, is there any risk on the radar?
The VIX closed at 16.45, down 1.2 points from the previous session, while crypto sentiment is at 14 out of 100, indicating extreme fear. The equity volatility index remains low. However, the disconnect between the dollar slide and the flat yield curve suggests hidden risk. We are seeing a divergence between safe haven flows into gold and the broader market's complacency. No specific credit warnings or geopolitical disruptions have triggered a spike in the VIX today, but the dollar weakness is a risk factor to monitor in Asian trading.
Risk is subdued, but the macro backdrop is shifting. Apex, what are we watching next?
3 key items for the week ahead. First, the euro-dollar pair is the primary beneficiary of the dollar slide. Watch for further strength against a weakening greenback as Asian markets open. Second, the dollar-yen pair is sensitive to US yield movements. With the curve flat, any further dollar weakness could pressure the yen, though safe haven flows may complicate the move. Third, the Nasdaq 100, down 1.52%, faces headwinds from AI sentiment, highlighted by Zuckerberg's comments that AI agent development hasn't accelerated as expected.
If you're finding value in this analysis, support the project at patreon.com/ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. That wraps up this edition of ShadowQuant Market Brief. Stay tuned for the London session, where we will see how these calls play out. Until then, trade safe.